We're back. Self-Made, episode 3, starring Carrie Cox.
Hey.
She doesn't want to be here, folks, but
I do want to be here.
she's
because
stepping
we're drinking
outside of
beer.
her box. So, Carrie is one of our new loan officers on our team. She's been in the business for a long while. Carrie, welcome to the show. Tell us your story, how you got into the business, and kind of where you grew up and all that.
Thanks, man. So let's see. I started in the industry 19 years ago. I thought that my dad was trying to rob me by paying rent. 19 years ago, he wanted like $400 a month, and I thought that was insane. So I was like, okay, I'm gonna figure out how to buy my own house. And I took a job with a title company and kind of jumped right in. That was 2001. And that was a refi boom at the time. Didn't know it, and it was pure
Where were you
chaos.
located at that time?
I was Dayton, Ohio.
Is that where you were born and raised?
Born and raised. Now here I am.
What was the market like back then?
I don't know. I was a baby. I didn't know anything. I knew it was crazy, and the escrow officers were in tears at the end of the month, and I was like, I barely know how to use a fax machine, but how can I help?
Yeah.
And it kind of just snowballed from there.
So you bought your first house?
Yeah, I bought my first house when I was 19.
Dang.
Yeah, crazy how much you just don't know about the industry, and you don't know about finance, and you don't know about escrow or how payments work, and
Yeah.
it's just very green to the whole thing.
What was that process like back then?
I remembered my processor more than my loan officer back then. My processor was cool. She called me like every couple days. She's like, I need this, I need that. At the end of it, like it was in Ohio, it's like round table. So you're there with the seller. That part's kind of weird.
Yeah.
But you dealt directly with the processor, and the loan officer just kind of stayed out of it. But yeah, it was still full documentation. I had 2 jobs, so I had to like go through all the
Pay stubs
documentation.
and
Yep, it was standard FHA, 3.5%, plain vanilla.
what was the rate back then?
Oh, I think I was right around 5%.
Oh, that's not bad.
No, not at all. And then, the market started picking up, and then you get a home equity. Home equity rate was right around 6.5.
Shoot, my first loan on my house was, I did my own deal, and I think I had like 6.5 or 6.75, but it was a 10-year interest only.
Yikes.
And those 10 years flew by fast before I was like, oh, shoot, I got to refi this thing.
Yeah. No, first house, plain vanilla, kept it easy. My house payment was like $550 a month. It was a glorious, super cheap house in Ohio. So.
Did you sell it? Do you still own it?
Sold it. Hindsight, I wish I had converted it to a rental, rented it to a family friend. Don't ever mix business and pleasure. I should have not done that.
Yeah.
Tenant sucked, didn't pay on time. So if I would have known back then what I know today, hire a property manager.
Yeah.
Especially for your out-of-state transactions. They can vet the tenant, they can pull the credit, and I wish I would have known that, because I would still hold on. I'd still have that house. I'd have that asset and that cash flow. So came out here in 2006 to ride the market, because people were making tons of money, and I was like, all right, this is my
Vegas.
opportunity. Let's do it. Got out here in 2006, and then watched the market rise and fall.
So you had a little taste of the run then?
Yeah.
Little bit?
Mean, I was in processing back then. I worked for Countrywide, so it was still pretty volatile. Like, if you didn't have 20 loans in your pipeline at the beginning of the month, you were getting laid off by the end of the month. So it was all about like meeting that funding volume has always been the name of the game, no matter where you're at. So yeah, I was with Countrywide for quite a bit, and then I came out here to vacation, and I was like, oh my God, it never rains. Clouds are never out. I'm like, I have to live here. Got back from vacation, instantly hit the transfer button.
Yeah.
And I got out here in March of 2006 and watched the market rise, watched the market crash, and I was like, okay, we need to get to a place that's a little bit more stable. Being still young and newer to the industry, I thought it was a Vegas problem. I didn't realize what was happening was like a national problem.
Yep.
And then I went to Denver for 4 years, and I was processing management. I took a job with Chase when I was out there, and after about 2.5 years in processing with Chase and managers don't make a lot of money. So I was like, what am I going to do? And one of my mentors, he was like, the only regret you will have is not doing this faster. He was like, get into originations. You're really great with the clients. You're great at the income calculation. You're going to be awesome as an originator. It's just educating your people. And I was like, okay, I can do that. That's easy. And then I got into originations in 2010. I got really good at HARP refinances. They were
remember those.
Super great. And that's when the light bulb went off for me. That's when I finally figured out how principal and interest and amortization works, and like the harm of refinancing into a 30-year, and like, do we need to break even? Are we going to sell it? And just like really started doing like very thorough deep dives with clients' financial well-being. And that it kind of like changed me into just like an originator into more like, is this kind of a financial plan at the same time? Let's not screw it up. Because through my experience buying my first house and then doing the home equity, no one really explained to me what a home equity was. So I got to learn the hard way, and the banks were like, oh, hey, you don't have a credit line anymore. We cut your balance, and now your credit score is jacked because you don't have a limit.
Or you're over the limit.
And they're in charge. And so it's like, I wish somebody would have pulled me inside and said, this is how it works. But no one ever did that.
Oh, yeah.
They were just like, here's your payment. Here's your cash to close. You good?
Especially back then, the money was just flowing. So if, hey, you got a $50,000 line, I mean, you were just like, okay, cool, we'll take it and run.
I mean, fortunately, it's Ohio, so you're not really that over leveraged. So, like, here's your $10,000 line on your tiny little $90,000 house. But it was still like, it didn't click yet. Nothing really clicked until I started getting deeper into the refinances, and then really started seeing like, okay, we have to have a short-term plan and a long-term plan. And am I going to put this person in this home today, and they are going to thank me 5 years from now, or are they going to curse me 5 years from now?
Yeah.
And so that's kind of like, that's evolved. And then I stayed with the bank for a while, and finally left the bank and came to the outside world because I want to do mortgages. I don't want to do bank mortgages. They're very particular about what they'll do, and they can't serve everyone. They're like, we want to cherry pick these type of clients only, and I wanted to serve the whole community, so I had to get out of banking.
And how's that been ever since?
Crazy. You've learned so much more. Like, being at a bank exclusively, you get really good at just the same play.
Products that you guys have.
Yep, plain vanilla every single time. You still have issues, you still have fulfillment, processing gets backed up, appraisals get behind. Like, that stuff is normal in the industry. You can't move the problem to another lender and think that it's going to go away. It's an industry thing. If you can't calculate income at a bank, you can't calculate it anywhere. So you got to take ownership on that one. But getting outside of the bank and seeing like, there is a whole other world of products that you just don't know exist. Above and beyond like the interest-only ARMs or the negative amort stuff we'd see, in 2006, but just like knowing that there were broker options and I-10 options and bank statement loans, and what are the terms and what do those terms mean. And now I have a lot more experience, like firsthand experience, to better explain those to the client.
And I know you're super technical. Like, I hear you talking with your clients and going over, the estimates. I mean, I never really get that deep into it, but I always am amazed at, the amount of information that you take the time to really walk them through all their different options. Would you say that's because you have more of like a processing background, so you understand a lot of maybe the nooks and crannies that maybe most loan officers might not know, since they don't know maybe the back end as well as you do?
Yeah. So it's maybe that's a three-part question. Like, one, my experience has shaped me going through a couple mortgages myself, refinancing, cashing out, kind of learning firsthand. So I got firsthand experience. Two, you get a lot of sample size when you work at the bank. You are churning, there are in heights when there's crazy refi booms, you'd be sitting with 20, 30 loans in your pipeline that are closing every month. So, and when the banks are doing 120-day locks, like you're with these clients, there's 90 clients at a time. So you get a lot more sample size, and they come to you a lot faster, so you see a lot more. So a lot more questions come up, and then you're like, okay, this keeps coming up over and over and over. I need to make sure I tell my clients. And then processing is the other background of it. So yeah, a lot of different things kind of make me who I am.
Yeah, that's good. I think sometimes it's, I think loan officers sometimes, see the success, right? And they think that they want to fast track that. But I think sometimes we all have to kind of stumble through figuring out the operations piece and really knowing how to put a file together.
Yeah.
Not that I get involved with, a lot of our files so much anymore because I have Alex, but at one point I did fumble through a lot of files to understand, hey, the turn times and how fast things could be done. And like you said, right, knowing how to restructure deals, which I know you're really, really good at, knowing those guidelines that sometimes you do have to challenge not the processor, but the underwriter.
Yeah, absolutely.
When they want to put their stamp on it and say, no, this isn't going to fly, and that, the guideline says otherwise.
It's not really challenging them, it's educating them.
Yeah,
helping them find it in the guidelines. So let me show you how we're going to do this.
Yeah.
So that part is a little challenging. You always feel like, man, the underwriter, they're supposed to know everything. Like, I feel dumb or stupid, or like I shouldn't go to them and challenge this because they should know everything. They're God, and then people make mistakes, or they don't know, or they miss the last policy. We're all human.
Yep.
And so you just got to go back around and be like, can we look at recalculating this a different way? So I like to think I'm decent at that. I do save a lot, or prevent a lot from happening. I like to have a lot of game plans.
Mm-hmm.
If I'm like, hey, this is a red flag, like, what are our backup options? And knowing, like, usually when I'm going to take a loan application, I have 2 or 3 backup options.
Yeah.
So I know that my client's earnest money isn't gone if something goes sideways. There's a backup plan. It's just not my most favorable terms.
If you could go back maybe and tell yourself from day one, would you do anything different in your career?
No. I maybe would not have been a lending manager because that role was not for me. And I managed like 3 different departments. And every time I'm like, why do I keep trying to manage? Like, I hate this. Stop doing it. And I'm good never being a manager again. That is for a very special person with very special leadership skills. And I have really high expectations, so I don't feel like I was the best manager. Usually top performers aren't the best managers. So I think if I was a manager now, my role would probably evolve from where I was, but that's the one thing, like, I'd have been all right. I don't feel like I learned so much from the management role. Mm-hmm. I would probably just take that away. And
so now being on the sales side, do you enjoy that more than the processing side?
Yes, mostly because it is much easier to have a relationship and get to know your client as an originator than a processor. Because as a processor, it's so fast-paced, you get to see that client for 3 weeks. You don't really get to know them. Mm-hmm. When you're originating, you started working with that person 6 months ago. You get to know their family dynamic, what's going on, they share their hardships with you, and so it's way more rewarding to be on this side compared to just like the paper pushing side. And processing has changed a lot. It's not gathering documents so much from the client, it's protecting the firm against fines and defaults and risk. So processing is more like risk management now than it ever has been before.
Yeah. So we can transition to one of your hobbies here.
Drinking beer.
We've got some beer. Carrie is a beer aficionado, and she's brought in 3 different beers for us to try today. So why don't you tell us what we're about to try, and how did you get into the whole beer scene, and tell us more about that.
I feel like if you can drink a wheat beer, that's like your gateway drug into better beer.
Wheat beer?
A wheat beer, like.
What would be like a
like Shock Top, Blue Moon.
Okay.
Something very mainstream. Wheat beer. Sam Adams makes a good wheat. So it's like you start with something mainstream, and that's kind of what did it for me. I was a vodka girl. Diehard vodka girl.
That's it. That or 1942. That's when we get crazy.
And when I was leaving Denver to come back to Vegas, I was in Denver from 7 to 11. I was like, man, I really don't feel like drinking tonight, but I got to put my game face on. So I was like, I'm going to just pretend to drink a beer. And so I grabbed a Blue Moon, and I was like, I'm just going to hold this all night long. And then I drank it, and then I drank a second one. I'm like, you know what? Like, that was pretty damn good. I think I'm going to keep drinking beer. And then it's just curiosity, and then craft beer scene has kind of evolved over time, and so it's made it easier to get better beers. I can't tell you how many Bud Lights or Coronas or Natty Lights or Busch Lights or any of those other like just really bad beers that I've tried that have really turned me off from beer. And so as things have gotten better, I have found a more desire to drink beer over vodka.
I think we all start off with those beers, right? In our maybe college days and some of us maybe earlier.
Yes, so today is the day we are going to get you to turn the corner and become a beer snob.
Let's try it. What do we got here?
Okay,
I'm
so
ready for this.
Number 1, Bohemian Pilsner. Czech is like the best place for a Pils, so that's what we're going to start with. Light, crisp, refreshing, just mellow. Just like...
Where do we find these kind of beers at?
There's a couple places you can find them in town. I did a little bit of hunting yesterday, so Beer Zombies is one of the newest places.
Beer Zombies?
Yes.
Shout out Beer Zombies.
Yes. Tiny little bottle shop next to Skinny Fats.
Which one?
The Durango location.
Okay.
In the Dean Martin location, they have some tasting there too. And that's where they hold the most of their events. So I just went to an event last weekend, tons of beer tasting. They bring you all these delicious unicorn beers. And then you're like, yes, I'm going to go to Total Wine and I'm going to get that one. And they're like, no, you're not, because it's in keg only and it's only at the show. But thanks for your support. And you're
Can
like,
you order a keg?
No. If Total Wine carries, if the distributor at Total Wine carries it, then yes. But you can't just walk in there and be like, hey, I want this like really unique sour from Colorado. They're going to be like, yeah, we don't get that. So here's what we have to offer instead. So you find what you like, you keep record of it. There's an app for that.
Oh, wow.
And then you just go from there. So
let's try this thing.
Pilsner first. First thing you want to do, you want to shake it really hard.
No, you don't. I was going to say, wait, what? I haven't drank a beer in who knows how long.
Today is the day, my friend.
All right. Leo, you're getting in on this too.
You may or may not like it. But if you don't, that's okay. There are others. That's the one thing that I love, that, with craft beer, much like wine, everyone is different.
Are we just chugging this thing or what?
It's up to you. I'm not a chugger, but
Ooh,
yummy.
that's pretty good.
You like it?
That's pretty good.
Am I going to transition you out of the vodka world?
Lager of the Lakes.
Okay, so that's Bell's is the brewery that makes that, and they're like super old brewery, and they've been around for ages, so their stuff's pretty consistent. Like with vodka, like what vodka tastes like every single time. There's a little variation.
Burns.
Yeah, a little variation between, who's making it, but with beer and the craft beer scene, you're always going to get something a little bit different. So,
have you tried this before, or this
Yeah.
is... How do you find out like a new beer?
You just fire off the tasting notes. So sometimes there's a giveaway in the title though. Like, I don't know, sometimes the beer will mention the type of hops that they use in the title, and that will kind of be like a giveaway. So if anything ever says like Mosaic on it, it means they're using Mosaic hops, and you'll kind of get the taste for that, and you'll know like, I don't love that type of hops.
Mm-hmm. That's pretty good.
You like it?
This is a good pick.
We'll bring you in some homebrew too, and see how you...
You got homebrew?
I mean, not right now we don't, but we try to fire something up usually once a quarter.
You make your own stuff?
I don't. My partner does. I'm the brewer's assistant.
I think Braden makes his own beer in Arizona, in Chris's branch.
We should do some bottle shares with him.
Yeah.
So this is the thing about different markets. Arizona is going to have access to beer that we don't have here, just because of distribution laws. So sometimes you do need to cross state lines to get better stuff. Get into California, and you're going to have a whole different selection than what you have here.
Ooh, we're going to have to do a podcast with you and Braden and see what kind of beers we got.
Yes, a bottle share.
All right, what's next?
Okay, so I was trying to find something to go along the themes of breakfast beers. Well, the breakfast beers I want, of course, aren't in can and don't distribute, so I found this instead. This is spiced coffee stout, dirty chai
Does that
stout.
mean you drink it for breakfast?
If you want, but yeah. So are you ready for your tasting notes on this?
I'm ready.
Well, let's do the ingredients. Malt. We'll get into that in a minute. Chocolate, special B, roasted barley, hops.
Chocolate beer?
Yes, there is chocolate. Do you have an allergy?
No.
Oh, great.
I had a chocolate Sam Adams beer the other week, I think. It was pretty good. I think it was Sam Adams.
See? You are becoming a craft beer connoisseur. Lactose, chai spices, ginger, black pepper, cinnamon, green cardamom, nutmeg, and clove. coffee beans, water, and yeast.
That sounds tasty.
Do you like coffee?
Not so much.
Oh, man. Okay. Maybe a bad pick for you. I'm going to give
It's
you
okay.
a really full pour.
I'll take it.
Is this a clean cup? Can I have this?
Oh, I like that.
Really?
Yeah, that's good. Leo,
Leo, some for you?
make sure the cameraman gets taken care of.
One more? Is this one clean too?
That's for you. So this is a breakfast beer?
I mean, if you want to drink it for breakfast, doesn't it taste like your cup of coffee?
It does. So you got to find this at like a special place too?
We picked that up at Beer Zombies, I think. Corey's in Henderson has a great selection. Total Wine, I picked this one up at Total Wine. There is also Top Shelf, which is a great tiny little bottle shop. 595 Craft Kitchen has a tiny cooler, and so does Tacos and Beer. So,
This is good.
and then the local breweries, of course, too. But a great place to pick up a bottle. Dark Moon Coffee Roasters, they have a couple really unique cans and bottles that you can grab there. You just can't bring them here, so you can drink them on the spot.
You can only drink them there?
Yep.
Why do you think they do that?
It's whatever type of liquor license they have.
Oh,
The same issue is with Banger Brewing downtown. You can drink on the patio, but you can't like leave the patio and go onto Fremont Street,
all these rules
right?
for beer. Crazy.
It's beer. I think because it's Fremont Street and it's probably City of Las Vegas, so it's challenging. But
It's good stuff. Leo, what do you think? Don't be getting drunk back there, bro.
the pills, I thought you'd like that one the best because you said you were like more of a German beer fan. So I was like, all right,
That's good stuff. What do we got next?
mango sorbet. This one's by Decadent, and most of their stuff's usually pretty heavy, but this is going to be a little bit more on the light side. It's only like 6% alcohol. 5.8, even better. Mango sorbet goes ale.
So is this your stress reliever after a long day at the office?
Peace and quiet is my stress reliever. If I can just have like 15 minutes of like no words, no sound, no nothing, I'm like, okay. Good little detox moment. But beer does help take the edge off, certainly. I mean, there's got to be mornings where you just open the fridge and you're like, do I have a Red Bull this morning or do I have a vodka Red Bull this morning? And you're like, ah.
Hey, you've been doing this longer than I have, so I'm sure there's definitely those moments that you have to.
Like today when the rate sheet changes on you 5 times
man,
and you're
guys,
like.
Today it's March 11th. We're recording this, and there was probably, 5 rate sheet changes today? 4,
And in the past
something
3
like that?
days. So yeah.
The market is just so volatile right now.
Days like that, you're like, you know what? I'm just not gonna play this rate game. I'm gonna just go have a liquid lunch instead because I'm gonna quote somebody a rate, and 25 minutes later, it's gonna change. So
So let's talk about that, because I think a lot of people, right now is like a refi boom, right, that we're all having.
what do you think, Leo? This is like orange juice.
I haven't drank it yet.
Try it.
Let's talk about this refi boom.
Let's talk about it.
Right? So like you were saying, you could go to lunch and literally come back and the rates change. Now, what about all these clients that are trying to time the market or follow a little CNN and think that, they're going to get that optimum rate when rates last week, almost skyrocketed from, where they are today?
Oh, I like to say you snooze, you lose. And I don't like to point and laugh and be like, haha, I told you so. But there's a reason why your loan officer is reaching out to you. If they're calling you and you haven't talked to them in 2 months and they're like, hey, I want to talk to you about this interest rate, they're doing it for a reason. Not because they want to make money off you, but because they care about your financial well-being and they know you have an opportunity to save money, and they're here to help you. So it's like, they're not here to sell you. It's not about fees. If they were, they would sell you on the high rate market. But they don't call you when rates are high. They call you when rates are low for a reason, to serve a purpose, to inform and educate. So
do you think too many loan officers just try to jam the refi down their throat, and that's why maybe they feel that, you know, they get a little maybe turned off by taking that call?
I think sometimes when we're in a hurry, we don't do a thorough job of explaining the benefits or the strategy or the why, and that person's probably been taken advantage of before, and then they're like, man, I don't want to refinance again because I don't want to recast my term and stretch it out to 30 years, or, oh, it's only a point, it's not enough savings. So it's like when we're in a hurry because we're trying to serve 10 people in a day, you know, your average loan application to build it and quote it out and get it locked in and get the disclosures, I mean, you're talking like 2-3 hour process if it's done right. So you're trying to help 10 people in this very short window because you yourself don't know if that rate is going to change. You're just like, just take the deal. Here's the short answer. Do you want this payment? Let's rock and roll.
Take it or leave it.
But they don't have that trust with you because shady stuff did happen in the market. So they're like, oh, I need to see it first. And you're like, okay, I'm going to get it to you. Just give me like 4 days to get you over your quote. So you get it to them, and then the rates change a little bit, and then they see it improve, and then they're like, oh, I think I might want to write it out and gamble. And it's like, gamble, snooze, and lose. Like, we can't predict what's going to happen tomorrow.
Right.
We don't know that the rate's going to be better in a month, but we know that this is where it is today, and we have nailed down one of those unknowns. And if it is long-term going to save you $50,000 and it's going to save you a little bit per month too, then take it. If you're winning on the short run and you're winning in the long run, take the deal, you know, and not try to squeak by saving an extra $2,000 in fees because it in the end will end up costing you $10,000.
Or an eighth in rate that saves them maybe $20-$30.
If that $20-$30 would be on like a $300,000 loan, you're talking like if someone's at $200,000 is going to be even less. So it's just like it's not worth it.
Yeah.
It's not for me. I don't think it's worth risking thousands of dollars in long-term net worth just to save $12 a month.
Yeah.
Like, no thanks.
And I think for all of us that's been doing this long enough, I think we could all say, you know, we've always seen the market swing for the worse faster than it's swung for the better, you know?
Yeah, these past 2 weeks have been an indication of that. Like, I did not project the rates were going to dip like they did. Like, it's an election year. Things are going to get a little weird. They do every 4 years. We know this. We've been around long enough. But I didn't think it would happen the way that it has. I had a friend text me earlier today, and he is like, yeah, I think I'll just keep an eye on rates. No, you as a consumer do not keep an eye on rates, because by the time that you have learned about this, because the media has pushed it to you, you're like 3 days
late.
behind.
Yeah.
I'm like, I will keep an eye on rates, and I will text you every single morning. I will tell you where they are, and please just have an element of trust. You know, it's not about fees. It's not about, you know, revenue for the bank. It is about improving your overall financial situation, helping you get out of debt as soon as possible.
Yeah.
So, yeah, it's crazy.
Back to the beer.
Which one do you like best?
What's up with this orange beer?
The mango sorbet. It's a goes. So usually has a little bit of salt in it. You like it?
Salt?
Yeah.
This looks like what do you call that? Like one of those orange like sherbet ice cream things.
Is that what you think it tastes like? Liquid ice cream?
Kind
They
of.
make some really
I like
good
the coffee
stuff.
one the best, I think.
You do? Man, I'm shocked. And you're not even a coffee drinker.
Yeah, hardly ever.
See?
Well, that one's good.
So when you go to a bar later, dinner, wherever, are you gonna fire on a?
Dirty chai stout. This might be my new thing. Leo, what you like?
He still likes the pills.
There you go. So 19 years into business, lots of ups, lots of downs. What do you think's changed the most from when you first started to where the business is today, or where you're at yourself?
Hands down, regulations. Hands down. I mean, there's 11 plus regulatory agencies that are constantly trying to find people, you know, and they've gotten in the way of the consumer. They're here to be a consumer advocate, but it's made the process more difficult for the client. And now, you know, if for any reason, you know, if you don't push a disclosure out on time, then something gets postponed, and that's unfortunate on the client's behalf. So it is really important to keep the client educated, but at the same time, like, the process probably needs to be revised, maybe the timelines. The disclosures are really important. That part, you know, maybe shouldn't change, but like the timeliness, some of those requirements. So regulations are vastly different. income calculations really haven't changed. That's been a staple. Math is math, and it always ends up the same way. So, debt to income ratios have really been about the same. Having reserves and funds for closing, that's always been the same. Credit score requirements, I feel like FHA is pretty liberal now. But yeah, regulations.
As you make your transition, here at Loan Depot, you've been here a couple months now, and you start to pick up, more credit pulls, more business. What do you think are some of the pillars that you're leaning on to continue your success here?
I really like what they're doing on the very big level. I like that they're taking all this consumer data and they're saying, let's look at consumer spending habits and let's look at future risk of foreclosure. So instead of, and I want to be a catalyst for that. I want to help drive that data. So it's like, if I can serve more clients and I can help Loan Depot get more data, and Loan Depot can have conversations with regulators and say, hey, you know what? It's not the person with the 641 FICO that's causing defaults. This is maybe a different indicator that we should watch for that's maybe more important. Like, to me, that seems really cool. So I want to be a part of that. So I like the technology piece. And I feel really confident that this company is going to be here 10 years from now. Having been a product at Countrywide, you don't know if your company is going to be here 10 years from now. Yeah. So, especially leaving the smaller firms that I have come from, I feel really good about the size of the company and the big goal.
I think one of the cool things, as big as a company as we are, I still feel that like everyone has a really good pulse on what we're doing. If you kind of look at it more like a hierarchy level, we might be lower on the totem pole per se, but I don't feel that like management or anything is like out of touch or out of reach, because I've been at places too that it's kind of the same thing, where you might have struggles or frustrations with certain things and your concern just goes unheard.
Yeah, I was really impressed. We needed to push a product through pretty quickly that wasn't currently on the books, and I'm like, this has got to get done. And it needed to get done for the client. It also needed to get done for the company, because if a loan closes and it doesn't have the right product backing, and then the company ends up buying that loan back, I was like, we've got to get this done, because I don't want a loss on their books and I don't want to be responsible for that loss. So let's push it through. And it happened really quickly. And for a company this size was really impressive. You would not see a big bank who gives you all of the big bank benefits, the tech, the intel, the indicators. Like, we have access to things that your big bank has access to, but we are not as slow as the big banks. I know a lot of great people at the big banks, and they're great, and they have a great need and a great purpose to open consumer checking accounts. It's not great for every single mortgage situation. Yeah. So we move much faster than the banks, so I'm really happy about that. Yeah,
and actually about that too, I hear a lot of times, right, we get clients that are like, oh, I bank with Chase or whoever, some of these larger banks, and they decide to want to use them because they feel that, oh, I have a checking account, life's going to be much easier when I get the mortgage. In your experience, was that typically the case, or is there some struggle with that?
Big banks, it is really convenient to log in and see your checking account and your mortgage all on the same app. Like, that's great. Love that. It doesn't mean that the loan process is going to be any easier nor faster, and the fees are, the same, if not higher, depending on the bank that you go to, and the rates definitely aren't more favorable. I price against the banks every single day before I quote my client to make sure, like, hey, if, this person banks at a bank, then I need to or credit union for that matter, I need to make sure that I compare. I had one of my clients tell me once, you don't shit where you eat, and we all know that rule. He is like, I bank here, and I'm going to do my mortgage with you, but I'm never going to let my debt and my checking account be tied together. And I was just like, makes sense. And then, I think back to my friend who, she and her husband, and the downfall of the market, her and her ex-husband, he was supposed to help make the mortgage payments. That never happens. Things get messy in a divorce, and the home equity line of credit got missed, and they essentially foreclosed, and they seized the money out of her checking account because her HELOC was tied to her bank. And so when he told me that, I had a flashback, and I'm like, yeah, I'm familiar with that. Now I know why some people strategically do not want to have a mortgage where they're banking, just because, sometimes it's better to just separate church and state.
So it's not always beneficial, right? Because like you said, it's going to come down to the loan officer at the end of the day, the processing team, the underwriting team, and a lot of times they all might not, one hand doesn't talk to the other, which could muddy the waters, right, when they're trying to close on a loan.
Yeah, there are some things that the bank will do exceptionally well. Like, for example, maybe they do just like a fantastic jumbo product, and maybe they want to do just mostly jumbos, and so they price terribly on an FHA loan or a VA loan, or, maybe they don't do down payment assistance, so the bank can't always serve every single client.
Yep.
And you can't just walk in there with a 580 and get an FHA loan. So maybe the bank makes sense, but regardless if it does or doesn't, you should always get a second opinion. Don't just trust one person's word for it that it's a great loan. Get a second opinion and vet that stuff out.
Yeah, for sure. A lot of people, I think it's funny, a lot of times they'll shop and clip coupons for groceries to save 50 cents here, $1 there, but yet come to your mortgage and you talk to one person. Yet you're borrowing $200,000, $300,000, $400,000, and you're going off of one person's advice.
Yep. So you need to gather all your data, come and sit down with someone, or send it an email, however, text it, whatever, and have that person take a look and say, like, hey, this looks like a red flag. This is not something I've seen before. The credit union's quoting you 2.75 on a 30-year, and I'm like, they were last week, but they're not this week. And
or they're hiding the point somewhere and not disclosing that.
Right. They're calling it origination, or, like processing.
What about the realtor that likes to get in the middle of that and tries to play matchmaker?
I think they're biting off more than they're interested in chewing. I understand the real estate agent's point that they want to be the client's concierge service. They want to give that client the ultimate experience. They can trust the real estate agent, but real estate agents are not licensed as mortgage professionals for a reason. The test is hard. There's a lot of rules. There's a lot of complications that go into it. So it's like, as a real estate agent, you're doing yourself a favor if you just wash your hands of it and be like, I don't know, talk to your lender about that. Because if something were to go wrong, the real estate agent isn't taking the rap for that at that point. So it's like, I know some agents that are really, deep with their referral sources, and they might say, oh, I'll take a look at the closing cost worksheet, or I'll get the payment or the down payment for you. But it's just like, do yourself a favor and stay out of it.
Yeah.
And focus on trying to find that next client and helping that next client, and let us just take over with the mortgage. And it's not because we don't want them to be involved. It's just, it's really hard to try to explain. And then they're the middleman. Just doesn't seem like a very effective.
You can tell us your honest opinion.
Seems like you're just going to fuck everything up, so don't do it. You forgot that the mortgage insurance was double because they're self-employed and there's only one person. And I had an agent call me the other day, and he's just like, my closing cost worksheet is different than yours. And I'm like, well, it's because I work for a lending institution and you're a real estate agent, so what are you using, Excel? And he's just like, I'm $4,000 off. And I'm like, it's because the funding fee is financed. And he's just like, oh. And I'm like, why are you trying to be a loan officer right now?
Yeah.
Just let it go and move on.
Do you think that's just a lack of trust, or is that maybe coming from the agent side and, maybe the broker and coaching them? And, I know a lot of these title companies too, they come out with these apps on their phone and, hey, you can spit out a cost worksheet. And to me, that seems so counterintuitive. Why are you giving them figures based on an app that if you're working with us as a lender, why not just have us do it, right?
Yeah, I think the apps that title companies run are great when you're trying to estimate seller proceeds. So as a listing agent, absolutely use the app. That's what it's there for. But on the buy side, don't hold yourself accountable to that, because if it's wrong, they're going to go back to you and be like, well, you told me I only had to bring 12,000 to closing and my lender's telling me 14. And then they're going to be like, hey, are you going to give me a $2,000 cut from your commission? Like, don't hold yourself liable for that. Just let it go.
Yeah.
I think that the real estate agents want to be involved. Part of it is control. It's human nature. We all want to have control of a situation. So it could be a control thing. It could be a trust thing. It could be them just trying to learn on their own how mortgages work. You know, a lot of real estate agents aren't homeowners. They don't have a mortgage themselves.
Get out of here.
So, truth be known, I am a really good stalker, and I reached out to some real estate agents during this past week, and I'm like, hey, we should look at refinancing your own loan. Where do you stand? You just quickly go to public record and you plug in the last name and you're like, that person doesn't own a home here. Interesting.
Yeah.
And that happens more often than not. So they don't know, it's like, I'm not going to say it, but you don't want to buy a car from someone who can't drive a car or doesn't drive a car on a daily basis. So maybe they want the information so they can educate themselves through the process.
Yeah.
I don't know. I wouldn't want to sign up to be the middleman, though, when it comes to financing. It's just too sticky.
Now, as we, our branch is very big on social media, and I know you're not a huge fan of the camera, so we appreciate you doing this with us tonight. Now, what would be maybe some of your words of advice for maybe realtors that are out there, or even loan officers, maybe within our company or, across the country that might be listening, that they might want to do video, they may want to do social media, but yet they can never get themselves to do it? Because I know, sometimes you don't want to do this, but every time we ask you to do something, you do it. So
I'm a team player. I'm always going to say yes.
So what would you tell that person who just does that, this always?
What would I tell me?
Yeah. Or to the person that's listening, that's like, shit, I want to do that, but I always find a way or a reason that I don't post something, I don't go on video, I don't do the podcast, I don't do what I'm supposed to do.
Well, if you can incorporate beer in all of your activities, it makes it a great time. So there's that.
That's easy enough.
And then someone once said, hire the people that are better than you. So Leo obviously is way better than me trying to figure out how to post something on social media. So let the Leos of the world turn those donkeys into unicorns.
What if someone doesn't have a Leo?
Then they should call Sean, because Sean is going to help them out with that. Hire somebody, or find out who someone else is using and delegate that task, because the person who's going to help with that social media, they're going to do it quicker and faster and better than you're going to spin your wheels trying. So just delegate that task to them, and then get your content, whatever it is, and post it, and don't look.
That's the big secret,
Don't look back at how many likes. Don't look back at, did this person see my post? Just stop. Just don't even do that. Like, I've posted a couple of things now. No idea what they look like, say, or do. I'm just like, hopefully that sounded good, and Loan Depot doesn't call me and tell me I'm fired for some compliance reason. But you'll get caught up.
You just got to do it, right?
You'll get caught up in judging yourself. So, or just drink a lot of beer during your videos, right? I mean, prior to this, like, I had to text Ivan, and I'm like, hey, can I have this on social media? Because half the stuff I posted is me drinking or me drunk. And he's like, yeah, you should probably take down some of those. And I'm like, okay, all right, I just need a little bit of guidance here. And then from now on, I'm just going to go to Leo and be like, is this good? But just do it.
I think that's one of the biggest things, even with our boot camp, we find a lot of people, they have the right intention. They want to post that perfect video, but I think, like you said, if you just post it and just not really care about it, I mean, you care, but you're not going to be overly critical about yourself, what you sound like, what you look like, and you just put it out there.
Clearly not, because I showed up today with hair and a ponytail and no makeup. I'm like, oh, there's cameras involved today? Great. It's not prepared for that. No, it's you. You can't change who you are, and it's like, accept who you are and just post whatever. Who cares? like I'm the girl with no lip. Everyone's like, oh, you should get lip injections. No, I shouldn't, because these are my lips and I own them and I've had them my whole life. So we're just going to like roll with the lips that we have and just post it, and I'm not going to look. It'll be fine. Just
That's
post
funny.
it.
Is there anything that you think about in the future in the industry that causes any worry or anything to yourself about, hey, what might happen in the future with the business?
Yes, twofold, because we're homeowners. We also work in the real estate industry. If the market were to crash, we're leveraged twice. If our property values take a tank, that impacts us as homeowners, but that also is going to impact our income. So we have to be very cautious in lending on how and where we invest our money. When I look at every single person that I'm serving, I picture, this is my neighbor, and I'm going to put them in the house right next to me, and do I want them to be in the best financial position? Because if they foreclose and they're my neighbor, that's also not helping my value or anybody else's value on the street. So it's like really, really important that you are remembering, like, every person that you're helping is your neighbor. So do the right thing for your neighbor, because karma will come back for you.
Yep.
So,
and we've all seen that here in Vegas, especially.
Yes. So the thing that worries me the most is I see a lot of people that are busting at the seams financially. They don't have any 401k or savings or down payment or no resources. And so you think, like, if I put this person in a home today, and I've seen this happen 100 times over, you will do a cash out refinance for someone, 60 days later, all the debt's racked back up. Or you get them into a home and the hot water tank breaks, or there's a water leak and insurance won't cover it, and now they're out of pocket $1,000, and you close that loan with $56 in the checking account. You're like, great, how are they going to pay for this? Some people have bank of mom and dad. I didn't.
Yeah.
So it's like, I have to know, like, do they have a way to come up with this money? And if they don't, like, we kind of have a little bit more of a plan. And that's something that's very unique here in Vegas compared to other markets. Other markets, I've noticed, a real estate agent will work with a client for months or years. They will work with their loan officer for years to come up with a plan, and then they will execute. Here, we're like, oh, you're interested in buying a home on Friday? Here's your contract on Monday. It's very transactional based. And so it's, we need to make sure we're doing the client the best service and setting them up for a financial plan. So we may say, hey, stick at 250 instead of 275, because your debt to income ratio is just going to give you a little bit better breathing room. And not everyone does that. So they inadvertently get somebody into a home and something goes sideways and they don't have the money to pay for it. And then that puts that client in financial hardship. So
just like we were talking about earlier today, right? With the whole coronavirus thing and some of these hotels shutting down, restaurants, and obviously a lot of people that are homeowners rely on their tips, especially if they're working on a strip. So now not only maybe not working, but yet that extra $500 a week in cash that you're taking home is gone.
Where are they going to come up with that money?
Yeah.
They're not going to tap into the 401k they don't have, and if they did have it, that's gone to shit this week. So it's like, what are our options? And then the thing is we would see this in the bank all the time. They'd be like, I need to get a loan, or I need this. And I'm like, when you're over leveraged, you can't get any more financing.
Yep.
So it's really important to just like maintain that financing and make sure that your goal is to paying down that debt and not getting into more debt after you buy a home. So I worry about people losing their jobs, because I worry, how are they going to pay their bills? I see the backside of this. I see how they're spending their money on their bank statements. I see their credit score. I see their lack of savings, and it's a little worrisome, because you're like, man, I hope nothing happens to their job, because if they go 3 months without a job, how are they going to pay their bills?
I'm starting to get some of that right now. A lot of people that we lost a couple of deals that were in escrow because of the coronavirus. There was a guy who I guess he was tied to the convention industry here in town, and he lost his EMD on the deal. He didn't care, but he was like, I'm backing out because I don't know when I'm going to go back to work. Yep. I got to find like a second job or something to maybe figure out, how am I going to make some money now?
I talked to someone else in the industry too, and she was also a little bit worried, like, what is this next year going to look like? I don't know. The real estate is not, a quick decision. It's a buy and hold decision. So you're going to buy this home today, and your plan better be to stay there for, at least 5 years for this to be a profitable financial decision. And you're about to sunk like $500,000 into this transaction. You should really make sure you're confident about it. If your payment is going up $1,000 a month and you're already not comfortable paying your rent, and now your mortgage payment's going up $1,000, like it's a lifestyle change. Like, could you come up with $2,500 to pay your mortgage tomorrow? Yes, but think of all the things you have to cut out to make that happen, and it is a lifestyle change, and it sucks. Like,
that doesn't happen overnight either.
No, and it's so hard to be like, hey, I'm not going to buy paper towels, and I'm going to buy dish rags, and I'm going to wash them every week. Okay. Let's see how that works, because let me tell you, it sucks, and like in Vegas, we're so pampered because it's such a convenient place, and then we have so many luxuries at our fingertips, and we're never told no, you know what I mean? And so for someone to come and be like, hey, you're not going to dine out in the entertainment capital of the world, no shows, no dining out, no expensive beer, you get nothing for 90 days, you're going to be like, all right, let me just slip my wrist now, I'm done, this life sucks, and granted, we all have very blessed lives out here, but we're a little bit spoiled. And so we have to be careful. Like, if we lose our jobs, what is that lifestyle going to look like? Don't put yourself in that position. Don't put yourself in the place where you're so strapped for cash and you're house poor and you have no money and you have no ability to save and you want to buy all these new things for your home. Like, downsize, like scale it back just a little bit. Try to make it easier for yourself so that way you're not stressing out the minute you walk in this door. Like, that part is hard. So I worry a lot about the local economy, because if the casino is shut down, what do we have? We have an awesome airport. Guess who's not flying right now? And so it's like, okay, we've got that. We don't have sports. We don't have, like a huge education scene out here. We don't have a ton of government contractors. We don't have a ton, but we have entertainment. We have a ton of entertainment. If that stuff gets impacted, it will be really important for our local market. So it's like, we need to make sure as loan officers we're doing the best thing that we can for our clients, put them in the best financial position, so that way, if they go 2 months without income, they're not completely screwed. But real estate agents may not agree with my theory. That's why I don't work with a lot of them.
Let's what brings you the most joy?
Knowing that I saved somebody thousands of dollars on their refinance. Like, when you are a loan officer and you focus solely on purchases, that is really important because you're helping the client achieve the goal of home ownership. Great. But how are you helping them also improve their financial situation 5 years down the road? So there are a lot of times where clients have come to me and said, this is where I'm at. And I'm like, great, here's my idea to get you in this better place. So we'll do debt consolidation, or we'll pay off your student loans and wrap it into your mortgage, which is a no cash out mortgage, by the way. Just my little lending processor brain coming out. And so it's like, what is the rate on the student loans, and what is the rate on the mortgage? And, what happens if this is a 15-year or 20-year? Like, if I take your current payment times 300 months, you've got 25 years left to go, and then I do a new loan at 15 years, 180 months, like, you're going to save X amount of dollars. Like, how could you not do this? That is really rewarding to know I'm putting somebody in a better financial situation. That part is really, really cool. So I'm super nerdy about
best part of the business. Like, it is really cool to see somebody get the home that they love, but I feel like the real estate agents really win that card because they showed them the home. They hand them the keys. We're just the person getting in the way. They're like, stupid lender, ask me for this, ask me for that, make me take a class, like calling me every 24 hours, asking me about deposits. Bank statement. Yes, and so it's like we just kind of get in the way of their goal. The real estate agents, I feel like, are really the shining stars in that. And so I feel like, when you put down your loan officer and your realtor hand in hand, who does the client love more? The person who gave them the keys. That's not us. I recognize that. I respect that. But call me in 5 years when I save you $50,000, you're going to forget all about that realtor. Like, so it's the long-term relationship that's really important. Yeah, help them buy the house, and then 5 years from now, help them get ahead better financially. Yeah. Well, Carrie, thanks so much for giving us your wisdom, your beer, and getting out of your comfort zone again to not only do a podcast, but get it on video too. So thanks for your time, and we're going to drink the rest of these beers.
Cheers.
Cheers.
What did they say in Hawaii? Mahalo?
Mahalo.
Oh, okay.
Check you guys out on the next episode.